Hi everyone, welcome back. Hope you guys are having a great day. So this is a clip from a previously recorded video. This is a much shorter clip of it. But as always, not financial advice, for entertainment only. Do your own research. And I'm invested in closing companies. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's get into the clip. Let's take a look at the stories that we do have here. We'll first get into HODL, see what's going on there. So they reported their financial results along with Marathon, Riot, I believe a couple of other ones. Stronghold provided theirs, another company as well. So we'll get into these three today. We'll get into the other ones tomorrow. So we've been having quite a few of them report currently. We've already had CleanSpark report, and I believe it was Cypher that reported also, if I'm not mistaken, as well. The main thing to take away from this one from HOT8 is on the press release is this issue here, obviously, with Drumheller. So as previously reported, the company encountered issues at the Drumheller site, primarily stemming from high energy input levels that have been causing miners to fail. So that's definitely not good. I don't know how they're getting high energy input levels through their system. That's kind of concerning there. This has materially reduced operations, which are currently at approximately 15% of our installed hash rate at the site. Remediation began in March and gained momentum in April as the team implemented new custom firmware across all miner models designed to lower the power supply's maximum output voltage. And I think most of their machines are, they're not Bitmain machines, they're the other ones. I can't think of the name right now, but they're I think they're Canon machines, I think. Correct me if I'm wrong on there. Designed to lower the voltage power supply maximum output voltage and ensuring our equipment operates within safe limits. So that's kind of what they're working on now. We are actively increasing repair staff, adding in additional repair center shifts, and have procured new hardware to expedite repairs and accelerate the speed at which we bring miners back online, and expect to have complete restoration in 10 to 12 weeks. So possibly not by the end of this current quarter, probably going into Q3 then. We're going to be possibly fixed with all this. So it's definitely a big issue for them. The electrical issues at the Drumheller site have been compounded by high energy rates, which further increase curtailment at the site. Right? They just seem to be having constant issues with electricity, whether it's their provider at the North Bay facility or now at this site as well. I thought they were supposed to have pretty good rates, being that they have most of their electricity coming from hydro, I believe. But nonetheless, this is what we're having to deal with at HODL right now. So it's one thing after another that's causing them grief and causing investors grief as well. Okay, so let's take a look at the numbers that we do have for them. We'll go over all of that. HOT8, stock price might be off a little bit. I updated this afternoon, haven't updated it since then. So it might be up or down a little bit from where it actually is on this one. So shares outstanding is about 237 million right now. Stock price is about $1.67. Market cap is 397 million. Current hash rate, we've talked about this before, so you guys can see all of this here. The main thing I wanted to take a look at is, number one, their performance here for the last 12 weeks. You can see it's in the red. 8 weeks, they're pretty much break even. 4 weeks, they're in the red. And then this week, they're kind of actually up a little bit here at 5.03%, or from last week, actually, they were up. So this is last week's data. Looking to some of the numbers that we do have here for the quarterly results. So these have been updated to the latest quarterly Q1 results. And these are all in Canadian dollars here. So we can see that last 4 quarters revenue has continued to come down here. They're at 4.52 million. This is for their self-mining that I have this on, right? Revenue self-mining Canadian. And when we're looking at the expenses here, those have also been increasing here over the quarters. Not sure why they had a huge increase here in Q4. Must have dumped some stuff into it. But it's back up to 25.5 million Canadian dollars on that one. So that's also not good. And that includes everything. This just includes their self-mining, basically. On that one, cost to mine 1 BTC, this is actually in USD converted. So that is gone up here in Q1 to $17.14 thousand per Bitcoin, which they were at 13, which was pretty good, right around there. That has kind of come up. The other thing that's concerning is their production of Bitcoin has continued to come down here over the last couple of quarters, the last 3 quarters, well, 2 quarters really. It peaked in Q3 with 982 for the quarter, and then it's come down ever since then. And it looks like it's going to be down again for this current quarter that we are in right now. Debt to equity is still good with them, as you can see at 0.15. Current ratio is still really good, 9.8, so no problems there. Total current assets has gone up to 378 million, and that's based on the Bitcoin price going up in value. They have a large HODL position. That has obviously affected that. Current liabilities has stayed pretty low. It's not too bad, 30.13 million, up a little bit from 27.79. So that's not bad at all. Okay. let's take a look at the numbers that we do have for them. We'll go through this, and I'll try to increase this font size for you guys a little bit so you guys can see what's going on here. Okay, I'll try to get to these numbers here when we're done through the main parts of it. So cash and cash equivalents went actually down. Actually went down a little bit here. So let's actually hide this one, fiscal year 2022. Make it a little easier to go against Q4. Let's see your hide column. There we go. Okay, so now we got 15.9 in cash and cash equivalents. They had 30 million there. So that's down. Accounts receivable is up at least 2.8 from 1.5. Digital assets is way up because Bitcoin price went up. So it's 352 million from 203. So that's a big help for them. Deposits and prepaid went down a little bit to 7 million from 9.8. And total current assets went up to 378 million from 245. And that's based on Bitcoin price going up in value from Q4. Okay. Total current assets, we covered that. Property, plant, and equipment went down a little bit here to 120 million from 124. Deposits and prepaid expenses is still up a little bit, 27.3 compared to 27.2. Intangible assets and goodwill went down a little bit here to 14.9 from 15.1. And then total assets came in at 541 compared to 412. Okay, they're currently, that's in Canadian, and I would have to figure that out, what that would be in USD, to see how they are actually ranked right now with their market cap in USD. But that's good that that has come up, but that's mainly because the only thing that's really saved them here is the HODL position. Liabilities, accounts payable increased to 22 from 13, so that's not good. Lease liabilities went down a little bit here to 3.8 from 4.3, so that's good. And loans payable increased to 12.3 from 11.8, almost 11.9 there. So total current liabilities increased here by about 8 million to 38 million from 30 million in Canadian. And then going down here, total liabilities actually increased to 70 million from 61 million. So that's also not good there. Total stockholder equity came in at 470 million. So that's up from 351 million. So that's good there. Total liabilities and stockholder equity up to 541 million from 412. So that's also good. And then here's revenues. This is the part that's concerning. Is we can see here that the revenues for self-mining was down to 14.5 Canadian million dollars. And you can see this trend here. They were at 49 in Q1. Q2 was 39. Q3 was 27. Q4 was 17 million. And now 14 million, and possibly going to be even lower in the current quarter that we are in. Hosting has pretty much gone away for them. High performance computing has increased here slightly to 4.49 million compared to 4.48 million. Excuse me. And that, let's see, high performance computing accounted for 23% of the revenue basically right now. Cost of self-mining estimated. This is looking at the cost for self-mining based on total operating costs. We're kind of looking at maybe 10.9 million for self-mining, possibly based on the percentage here. But we just don't know if that's going to be accurate because they're using GPUs and they're using ASICs for Bitcoin mining. So it's estimated right now. Okay. Site operation costs was down, which was actually good, to 14 million from 16 million. Depreciation down to 10 million from 29. So that's good. Cost of revenue was at 25 million, down from 45 million. So that's good as well. So they're at least getting costs under control here. Gross profit minus depreciation was about 4.6 million. Gross profit minus depreciation percentage was about 24.46. You can see that that has been coming down as well, which isn't good. We want to see that go back up a little bit. Probably closer to 50% like some of the miners are right now. Operating expenses, selling, general, and administrative went way up here to 24.3 million. That's also concerning there from 14 million from Q4. Gain on disposition of digital assets was actually an increase here of 4.9. Haven't had anything else on that before. And then they took an impairment, and mining infrastructure and servers was 113 million in Q4, which we didn't have that. Obviously, that's why we have that big expense here in Q4 for them. Total operating expenses was 25.5 million compared to 152 million. So in that sense, it's good, but it's still up from where we were in Q3, 25.1. Okay. Then net income before tax, that was 27 million compared to 149. So that's fine there. Down a little bit here from obviously the 31 in Q3. And net loss income was actually 108 million in profit. They were in the positive here compared to a negative 187. And that's mainly driven by the Bitcoin price going up in value and their assets, the Bitcoin HODL that they do have, increase in value. That's what's driving that right there. So overall, they came in at actually a positive 49 cents per share. Basic and diluted was 47 cents Canadian dollars. And then here's where we have basic and diluted number of shares. That's how it's being calculated. So they came in positive because the HODL position that they do have, but everything else is just going in the wrong direction for them. Okay. And looking at some of the metrics that we do have here, it looks like cost of mining 1 BTC came in at 17,000, like I said. So that's definitely an increase there. Debt to equity ratio we already talked about. Current ratio we talked about. Book value of equity assets about 470 million Canadian. Price to book ratio is 0.84. And then enterprise value is about 535 million Canadian. And then a beta was 119 million, it looks like. On the positive revenue of 19 million, general administrative was 24. So 128%, not good. All right, they spent more on general administrative than they actually made on it this past month. Okay, so that pretty much leads us to, are they undervalued, overvalued? Right now, I think they're pretty well valued with a P of 15. We're looking at the last 4 quarters, which with the current quarter that we're in is an estimate. The prior 3 quarters are actual numbers. Based on that, 50% net income, they're not there right now. They're at 24% net income, something like that. Having $1.72, so I think they're pretty well valued right now as it is. I think a lot of them, investors are giving them the benefit of the doubt because they're going to be growing possibly to 7 exahash with the merger of USBTC. Okay, now when that happens, we'll have to reevaluate things at that point. But right now, I think they're pretty well valued currently where they are sitting at. Okay, maybe slightly a little bit undervalued, but just barely. Okay, let me know what you guys think of this, and we'll get into the next one.